More than 900 million SpaceX shares unlocking today. That's more than double the publicly available stock in Elon Musk's company and a space and AI company. Joining us now is Doug Flynn, founding partner of Flynn Zito Capital Management. All right, Doug, we were talking earlier this week ahead of the earnings report that came out. That was a pretty solid beat. Early SpaceX investors now have a chance to cash out on their investments as this restriction expires. The stock was already down pretty significantly since it's opened. I think more than 50% off its high when it first IPO'd. What do you make of this time, this moment, the desire to dump? Is this really the right time?
Well, it is interesting. That does give some of those insiders, the early investors, the chance to unload their shares for the first time. And that is a record amount of shares that can be unloaded. And what would happen is, normally, if a lot of people are selling, you would see the stock down significantly on a day like today, because that would mean there were no buyers on the other side, and the market makers would have to take those shares back. But when you see the stock up, what it tells me is that a lot of that downturn was already priced in, as you mentioned, with the stock drop. And so I think you had a lot of buyers show up to pick up a lot of the shares of the people that wanted to sell, and or a whole bunch of people did not end up selling after all. So I think that's where we are right now, and that's actually a pretty good sign for the stock longer term, actually.
Yeah, and it's up pretty significantly today. I think almost 5% as of this moment ahead of the close in about 13 minutes from now. You know, SpaceX stock was on the rise throughout the day. Again, up almost 5%, I think, right now. What is the case for keeping the stock?
You know, that's a great question. I break it down like this. You have to do this as an investor. You have to break down any company into business fundamentals and stock mechanics. And so is the company a good company underlying? Does it have good forward earnings and potential? Those fundamentals of the business are one thing. The stock price, a stock can trade on anything in the short term. It could trade on news. It could and you have to separate it. So, but what happens is if you take a 30,000-foot view and look long term, eventually the stock price does recognize the long-term fundamentals and the underlying fundamentals of the company. If it's disjointed, that's where the opportunities are. So in a case like this, if you believe in it long term and there's not a lot of competition and there is a lot of opportunity here, when you see prices you like or things are off, that's an opportunity to pick it up. And that's the way to think about it. Think of it as two different pieces. What is the underlying value of the company and the business fundamentals? And then where is the stock trading? Is it too high, too low? That's what you want to look at.
Warren Buffett always talks about moats and things like barrier to entry being high, and that's certainly the case with SpaceX. And I think with its earnings report this week, it showed profitability, it showed just strong revenue. There was how much capital expenditure or future spending is happening, but obviously investors are eager to have it today or eager to hold on to it and not necessarily sell. Let's turn to the Federal Reserve. Governor Alicia Cook reiterated an earlier position that she is ready to raise rates if inflation does not come down soon, saying in part, quote, "We might be able to afford to wait for longer in a different environment. We do not have that luxury in this one." A lot of people have been watching the Fed for the better part of the year, initially hoping for rate cuts last year, but there's been this consensus that we could get a hike, and Lisa Cook pushing for that now. Do you think that's the right move? What do you make of her comments?
Well, I think where she's coming from is that the Fed's preferred inflation gauge that they look at is called the core PCE is at 3.3% year over year. And that's way above their 2% target. And it's been that way for almost 5 years. So she's saying, look, here's the thing, if inflation's staying higher for longer and the economy is doing better than anticipated, why would we cut? You don't cut when the economy's doing well and inflation is high. And she's saying, you know, get real that the next move might not be a cut. It might be on the other side. So it's kind of counter. If the economy does too well and I want lower rates, well, you don't want to push in more growth into the economy. That's how you then ramp back up inflation. So that's what she's saying. You might get higher rates. I don't know that we'll actually get them. I think that inflation will come down naturally. And if it does get closer, that'll be the point.
What's the downward pressure that brings it down, right? Because a lot of people pointing to the upward pressure, the war with Iran, being one of them, even tariff policies. And inflation has been, as we heard back in 2019, 2020, sticky literally ever since then.
It's a great question. I think, look, there's two things. You've got oil prices eventually, if they settle back down, and they're kind of getting there, and eventually, you know, at some point, we hope that that'll normalize. And then you've got AI, look, AI is just a huge productivity boost. It's weird because on the one hand, you got the productivity boost of AI. On the other hand, all the purchasing that's going on for the data centers and the energy is an upward inflation environment. So they're offsetting, but you can't just look at the cost side and not look at the benefit side. And those are the benefits on the other side. So we'll see eventually if more productivity and those kinds of gains outweigh the increased costs, that's some more of the downward pressure that you would see. And we don't have to get crazy here with inflation, as long as it starts trending downward. And the next one, by the way, might be a little higher than this most recent one. But overall, if the trend is start to move in the right place, in the right way, then that's what we're looking for, and then I don't think they have to raise. That's really what we need to see, the trend.
Well, we certainly need at least 7 members of the 12-member FOMC to decide that. And so far, we've only got, I think the highest was 3 in the last time the Federal Reserve met. Lisa Cook on board with that. All right, let's talk about markets today, because we had a rally this week, but we're starting to see the opposite side of that today. Stocks across the board, major indices in the red, as traders have been holding their breath on the Strait of Hormuz reopening. We heard the president say on Monday and Tuesday that was going to be imminent any day, probably today. But we're coming close to Friday, and we're not seeing that just yet. So it looks like some of that steam is being pulled out of the market. Do you continue to expect this high and low when the president speaks or the administration says the Strait of Hormuz is going to reopen? We see traders rally, even though this is like the 6th or 7th time that's happened, and then lose steam ahead of anything like that coming to fruition.
Yes. So this is range bound in that way, like you're kind of bouncing up and down based on that. And I really do think that he uses that as a gauge to determine whether or not he's going to do an attack or take the metal off the pedal, if you will, and just kind of lighten it a little bit. So absolutely, that's part of this. And so, at least that's what he's put out there. And so I would go with that as how it's going to be. Now, the market wants to move higher. The earnings are clearly there. So when you get a good piece of news, that's a reason to move into that and drive it up. On the flip side, everyone's made a ton of money in the stock market over the last 1, 2, and 3 years. A little profit taking at all-time highs is very normal too, and that would be like a day like today. So I would embrace that volatility and look for it when you see some sell-offs on a bad news. Take a look at good companies and pick them up. That's what you want to do. And then when things are high, don't chase. That's a mistake a lot of people make. They only want to buy at the high, and I would avoid that. So expect more of this sidewaysness. Hopefully, longer term, we get that behind us, and the market can move higher, which it really wants to do.
Yeah, it's that old saying: don't try to catch the falling knife. You'll probably get cut here. All right, Doug, Flynn, always appreciate chatting with you. Appreciate your time.
Thanks, Alicia.